Welcome once again. Today we are talking about mastering risk management for prop firm traders, a profitable way to trade prop firm successfully. Okay, by James Obi Samuel, that's my name, and you can call me KJV. Okay, so let's look at it one after the other. Now, I won't go through all of this. This is just for you to be able to understand it. So these are the major models that we are talking about in this particular topic. Prop firm challenge fundamentals. You need to understand what prop firm challenge is. Remember, for those people that are in the master class, remember that immediately after this training, we are going to get our prop firm account and we are going to start the journey from next month to trade and be profitable. I will hold you by hands and show you how to do all these things so that you'll be able to be profitable throughout the end of this masterclass. And I believe after the masterclass, which some of you have learned a lot of things from me, you should not have any doubt from becoming profitable. So we are going to look at what prop firm is. Now I will explain in depth on what prop firm is and I will be fast with it. Your capital preservation and risk per trade, maximizing your personal building your personal risk management plan. Okay, I won't build it for you. I can suggest, but after studying yourself, you build your own. Then we look at emotional risk and mental traps over trading for a win or lose, after a win or a lose. So that's what we are looking at today. So let's quickly go at it. So what is prop firm? I'm going to take my time to explain this, what prop firms are. Prop firms are actually companies that they've been able to get enough of funds from different investors. Okay, so that we to be sorting for these investors themselves. These prop firms have these investors. As a matter of fact, some of them have access to funds from bank, and their only one goal is to fund traders. But because of this money are huge, they are not just going to give traders this money straight away. They want you to have some challenges. So some of them, they have challenges that when you pass their requirements, they will now fund you live. Okay, and thank God for these days also, things are increasing. Some are not even going after that. They will even give you the account straight away and say make 10%, make 5%, and then you pay you. For me, I don't even preach challenges again, because after sometimes I discover that the profit you used to pass phase 1 of your account, you will have actually withdraw it from instant funded account and you have made money. So that's what I do. Okay, so let's look at it one after the other. Understand the structure, rules, and pitfall of prop firm challenges before risking $1. Now, one thing about all these prop firms is that some of them are not also there to make you make money. Some of them have actually make it so difficult for traders to make money. Trading is difficult in its real sense, but these people are also there again with quite a number of rules to make it difficult for traders. So some of these prop firms, we are going to avoid it, because when you understand the rules very well and you understand the implication of those rules, the more the better for you. Okay, so let's move on. I won't waste time on telling you what those ones are. So what is a prop firm and how it works? Prop firms are financial companies that fund traders with capital to trade forex market. The way for prop firm begins where that those people that have trading hubs or trading house, they have some places where they gather traders and then they fund them. That is the beginning of prop firms. And then of course they try to evaluate your risk appetite, your trading style. The beauty of prop firm is that it entices different style of trading, different approach of trading, and that diversity is the risk management for them. Because if someone lose, eventually someone will win, and if the win is more than the losses, of course they are going to eventually win. Okay, so that is the first thing. They fund traders money, but now we don't need to go to their offices again. Earliest ones are in Lagos, around the Kedah area. They used to do that. Okay, some companies like that. I know one in the UK. They are still doing that now. Their own prop firm is not online. Their own is still in a physical place, and they've been in ages. They've been operating for more than 20 years. Okay, so account sizes ranging from $1,000 to $300,000. Most of them, the highest is $300,000, but you can now scale up to $4 million. There's the one I work with that you scale up to $4 million. Okay, so traders pay a fee. You can pay 0.5% of that capital. Just imagine they want to give you $1 $100, $1,000. Let's use $1,000 as an example. 1% of $1,000 should be $10, if I'm not mistaken. They can ask to pay $10 or pay $5 to get access to this. Okay, at least that is the only thing you are risking. You that you are trading up to $1,000 account, they are not giving. They not ask you to pay just $5. Of course, $1,000 account is still small. I used to advise at least start from $3,000 and above if you want to have something reasonable to take home after your journey. Okay, if successful, you get access to live funded account and a profit split of, some of them do 70. I think the lowest is, I've seen the lowest of 60 before. I've worked with one that their first payout is 50%. Okay, then the next one is now 90, and no, 50. I think 50, the next payout 60, the next one 70, and then when they get to 90, and when you get to some account size that are very big, when you scale up to that, they will pay you up to 100% of your capital, because at that time they will now plug you to bigger accounts. Though you might be trading $1 million account, but because they've seen consistency in what you do, they will now plug your account to up to $10 million account. Now, all the profit you make in that $1 million account is yours, but they are making more. Okay, because they are plugging you. As a matter of fact, if they are so good, they will might even plug you to up to $20 million account. That is how it is. But not all pro firms, because some are out there also to scam traders. Now, but traders have been in that circle of pro firm all the times. How are you going to survive it? That is the purpose of today's class. The firms keeps risk low with rules. How do they keep their risk low? With rules. By giving you is a capital, then they will give you rules to follow. So I'm going to just digest some of, I will talk about some of those rules in a short while. Challenge fees. Thousands of traders pay to attempt evaluation. Now, how pro firm make money? Because if pro firm is giving you an account, how do they make money? Sometimes they make money, or the first way they make money is through challenge fees. That's 0.5 for 1% that they are challenging you. Every one of us in this meeting can take a challenge, and only 2 people pass. So all the money they've made from the other 12 people is their money, but they will refund you that money only if you pass. And that is why for me, I don't really like all these challenge phases. I love instant funding because it's easier, and of course there is peace in it. So risk control, no payout share. Of course, if you are funded, they make money from, maybe they are paying you 80%, and then they are collecting 20%. That 20%, imagine they are collecting 20% from over 50,000 traders. Some of these platforms have more than 1 million users. Let's just say 10,000 traders, and they are taking just few percentage. That's a lot of money. Okay, risk control. Most traders fail at the challenge phase, keeping from capital safe. So some of them, they keep their capital safe. Inactivity and rule violation. Some funded accounts are revoked and protected from what? Funds, because of rule violations and all of that. Now, let's look at types of pro firm challenges. We need to look at all of these things before we go into the risk management techniques itself. I'll just be fast with this. Okay, so let's look at pro firm challenges. We have 1 steps. There are some that have 1 steps. I've done 1 steps before. In my journey, I've traded pro firms a lot, and I have the experience in it. 1 step, some of them will say 8% profit target and 5% daily drawdown. That is how they started before. But if you look at it, the techniques is not balanced. When they are saying you should make 8% and they are only giving you 5% to risk, can you see is a lot of unbalanced stuff to do, but there are always ways to beat them at their games. Fast track but stricter risk rules. It's very strict, but it's fast because it's just 1 phase. Though some, I have a companies that we work with at 2 income, they just 1 phase, and then they also give you up to 12% to risk overall and 6% to risk in a day. That makes it very attracting, and that is why that is the company we actually push to our students, because the drawdown is now wider and you are just going. But they now say that you should make 10%. 10% in forex trading, to be sincere with you, is not easy to make. To be sincere, if you are not gambler, if you don't want to gamble your money, and I don't train gamblers. If you are gamblers, you can walk away. I train professional traders because that is what makes you to be one. You don't need to flip your account. Now, you cannot make a steady standard of living with just $100, even with $50. How much you want to make? You always want to flip, and the point of you flipping that $100 you will lose it. That is the secret of trading. You will eventually lose those money. Then why can't you train yourself, be good enough, and then have access to pro firm's account or investors funds that will not put you under any pressure. So in total, as at last year, I was trading almost, was it not almost $200,000? Yes, oh no, $300,000. That was $300,000. That was what I was trading last year. But this year it dropped a little, so I'm not no longer trading $300,000. But in the process of the 5 years, I gave myself that I'm going to trade nothing less than 1 million. Okay, so I'm bouncing back up again because I lost some challenge, some of my accounts early this year. I think around March or so, I lost some of my accounts, and then I'm getting more. I'll also teach you how I've scaled up. I actually started from $3,000 account. I can show you proof. Then I scale up within a period of a year. Last year was when I majorly started trading Profem, and that year I was able to just scale up to around $3,000 account. $300,000 account. Sorry, $300,000 account. That was what I scale up. You can see that is massive, and but my goal is to be able to hit $1 million account in 5 years. You can see how to set goals, and you also put it in time. Of course, if I have $1 million account and then I'm just making 1% in a month, 1% of how much is 1% of $1 million? Someone should help me with that calculation. How much is 1%? Someone should help me. Of $1 million, 1%. Am I talking to human being? Yeah, 10K. Someone has answered me. Mr. Ice has answered me. I was not expecting Mr. Ice to answer me. I was expecting others. 10K. Now, what can 10K do for you in a month? What can 10K do for you in a month? That is 1%. Now, this is why I have these sayings. I used to tell my students, what you cannot make up in skills, you make it up in numbers. It's not about you trading $1, $10, $50, and you are seeing those YouTubers and those TikTokers telling you to flip accounts. It doesn't work that way. Some of them, they make money from influencers, influencing. $10,000 account is over 16 million naira. Over 16 million naira in a month. Okay, when I was having up to $300,000, I know the amount of money I was making every month, every single month. I know how I was living. Okay, then it is you building the skill that matters. I'm telling you this. It's all about you building the skill. And is it possible? Yes, I have done it before. You can also do it. And that is why. And how much are you going to get it? Your first payout can buy multiple profits. Just one payout can do that. Okay, so that is why I don't advise traders to go in there and be looking for be asking people to fund them. Just invest $100. Prepare $100. As a matter of fact, we are starting that next month on the masterclass group to trade, and then when you make your first withdrawal, then I will give you a certificate that yes, you have you are now profitable. I have built you well, and you have built confidence. But I will always still be there. You will not be removed from the group. That's one thing we don't do. Even if you have passed through our mentorship before, we don't remove you from the group. New mentorship are coming, you see, join them. Some people were just old students. Okay, so we might not do that next year though, but you will see, give you some leverage on our trainings. Okay, so another type of account is two-step challenge. Two-step challenge mean that they are going to ask you phase one. It was phase one and phase two. Phase one, they can ask you to make 8%, and phase two, they will make you to have 5%. Those ones are very difficult, to be sincere with you, because you can pass phase one, and when you are doing phase two, the market condition is not good, then you lose it. It's not that your psychology is bad. You only lost it because the market condition is not static. But there are ways to actually still beat it. That if you now build your system on the worst case scenario, that what is the worst thing that can happen to you in trading, and that will make you to survive even the bad week or the bad month. Okay, I'll give you an example. Last month I was able to make about 5 to 6% of my capital, and the first two trades I took this month was just not in losses, but they were just paying all around. I don't want to lose my account. What did I do? I reduced my risk totally. Okay, this one account I show you now is not my major account. The main account I want to place withdrawal very soon is not on my system, is on my phone. So when it hits 15%, I'm targeting about 15%, I think. Okay, so I'm around 5% to 6% already on it. So can you see? And I did not get to that 6% in a month. That's the funniest thing. My target for a month, but we are going to get there. So before some of you, I know even that you are trading already. You are already targeting 5% in a month, 3% in a month. I don't target 3%. As a matter of fact, when I make 2% in a month, I'm a professional trader. That's the difference between me and you. When I make 2%, I'm a professional trader. I'm profitable for that week, for that month. And then if I make 5% in a month, of course I'm still a profitable trader. And if I even make 0.5 in a month, I'm profitable trader. Even though if I have a drawdown of 1% in a month, I'm still a profitable trader. That is what is different between me and you. Because I'm not looking at what I've done now, I'm looking at the overall. Can you survive at the long run? There's an account I got with someone, myself. The guy said that he challenged me that we should get an account together. He trades it, he trade mine. We got 2 accounts together. He has lost his own 2 accounts. I still have my 2 accounts intact. Because why? He was risking 1%, and I will get to that. So let me continue. Then we have 3 steps. As a matter of fact, that also have 4 steps. When it's 3 steps, the challenge the reason I love some of these 3 steps in code is that their profit target is not much. 5% is their profit target. So they might say 5%, 5%. They might say 6%, 6%. So it is longer but low pressure. Most of the time I love these ones. Why do I love it? Because if you know what you are doing, it's going to be very rare for you to lose such account. Okay? Because you are targeting 5%. This month you see 2.5 or 3%. The next month you see, so you can give it each phrase 2 months. That's in 6 months you pass it. But if you look at your last 6 months, do you even place any withdrawal at all? You are not following these things because you just want to make it in a month. And even after the whole of 6 months, a year has passed, you don't even make any profit. These are the things that your mentors are not telling you, but I will tell you here. Okay? So then we now have instant funding. I love this one. Instant funding is the best. Okay? Instant funding is the best. So let's move on to the next thing now. Let's look at the rules. Key rules. Just some key rules that some of these prof firms. I think I'm spending much time on this. This is not the risk management I want to talk about. So after this, I'll just move to the risk management. But of course, some of you will be trading prof firm next month. That's why I need to give you this. Daily drawdown. As a matter of fact, I think in the last 3 years, I have not lost a prof firm account because of daily drawdown. I cannot. Why will I even lose a prof firm account because of daily drawdown? Because I'm losing 5% in a day. How will I lose 5% in a day? It's just I'm not professional. I cannot. It's not possible. Mr. Ice, is it possible? Is Ice still here?
Yes, I'm here.
Is it possible?
No. It's not possible for you to hit daily drawdown.
I cannot hit daily drawdown. I'm calling his name because he knows how we trade. Even himself can never hit daily drawdown because I'm like it's daily drawdown of 4%, but you are still using daily drawdown because you don't know what you are doing. You don't have a plan, and maybe someone has not explained this to you. So, and that is why I'm here to give you a full breakdown of that. Okay. So maximum drawdown means that even if you lose 2 today, you lose 1 tomorrow, and when it get to 10%, they are going to take the account away from you. Meaning you should go and get another account. You are not yet a professional trader. As a matter of fact, if you trade well, 10% is a lot. I should tell traders when you are already on 6% drawdown, it is only that you are a good trader that will take you to come back from that. If you are highly disciplined, I have come back from 9% drawdown before. Yes, of course, me, I'm a professional trader. Okay, but it's rare for another trader to come down. So you should not even find yourself around 5%. Yes, I'm telling you that. So then some of them, they have rules of profit target of 5 to 10%. That's what they do, or 8 within 5 to 10%. Now leverage usually is always around 1 to 10, 1 to 50, so that people will not burn their money. They will not over risk their money. News trading, some of them allowed, while some of them do not allow. Some of them will say that you must not open trade between 2 to 8 minutes or so of news trading, high volatility news trading. Okay, lot size limit. Some of them they will limit your lot size that you should use. Some of them they also give you time limit. Many challenges requires target within 30 days, but that is not it again. Before, it's always 30 days that you must pass your account in 30 days, and that was what put pressure on traders that actually make some of these traders to lose their account, because in 30 days is too small. Why will you be asking me to make 10% in 30 days? Even GBP USD has not moved 10% this year. I don't think there's any currency pair that has moved 10% this year. Then you want me to make 10% in a month? I'm talking of the whole of this year that we are about to end. Let's go to the chart and you go and see. The only pair that has moved over 40% this year is gold and BTC, and maybe silver too. But any other pair has not done that. Most of the time, even the S&P, the highest is going to do in a year is 20%. Okay, talk less of you as a forex trader that they are now saying to make 10% in a month. So it is not how forex trading work. Forex trading does not work with that. If you are not giving yourself realistic, 10% is too much to make in a month. It's too much. Don't let anybody deceive you. Especially when you are looking at for you to survive. If it's your personal funds, okay, and you can afford it, you can have $1,000. Sometimes I used to do that in those days. I will fund $500, I will fund $100, and then I will risk it all because I can afford it. If I lose the $100, it's nothing to me. But can you, if you are starting from the scratch? I started from the scratch before I get to that stage also, and that's what I'm actually revealing in this book. So you can say that this book is very, make sure you lay hands on this book, it's very rich. Okay, so lot size limits, and then time limit. Some of them give time limits, consistency rule. Some of them ask, this consistency rule is the most stupid one. Okay, but there are always ways to also understand it. So let's move very fast. So I'm going to move very fast now. So capital preservation and risk per trade. This is where the risk management begins, and I want to give you how I trade and what professionals do. This is what is going to make you to become a professional trader. You might understand ICT from A to Z, understand support and resistance from A to Z, understand candlestick like the palm of your hands. But if you don't understand management, as a matter of fact, you are not going to make any progress in trading. In life generally, management is key. Some people do not have structure, and that is why you see them doing anything. Some of them, they make salary today now. You ask them, what have you used your salary to do? They don't burn them. They don't. I remember when I was much more younger, in my early 20s, I make a lot of money in my early 20s, so not from forex trading. I was doing music then, and all this money, like what my mom used to say, my mom would say that for those that don't speak the language I just said now, it means the first money that the child sees from working, he uses it to eat akara, he uses it to eat buns. Okay, and that was what I actually did. Because of course, even some of those people that do not have problem, they know that if they ask me, I will give them. And I was doing all of that, but I lack one thing: money management. I begin to have good money management when I got married, and I know that there is responsibility for me. Back in my early 20s, it was not. Assume I knew about forex trading in my early 20s, probably it will have helped me a lot. And I'm sincere with you. Okay, but I started trading in my late 20s. Maybe I started around 25 when I was 25 or 24. I think I know about it when I was 23, I guess. Then I went into it totally when I was 25, and this year I'm 30. That makes it 5 years, and I've been trading consistently. And I became a full-time trader, I think, the last 2 years, if I'm not mistaken. Yeah, the last 2 years, almost 3 years now. So let's look at this now. Capital preservation: survive the game before winning it. Yes, Bob Marley said, "He who fights and run away lives to fight another day." He who fights and run away. I don't know how to sing, right? I'm just kidding. Lives to fight another day. So he who fights and run away lives to fight another day. If you can survive today, you will make profit tomorrow. Don't let anybody deceive you. But if you burn your fingers today, I remember in those days when I was doing salary work, I will get a profit account. I have lost a profit account within 1 hour. Within 1 hour, I entered over 1,000 trade. You think it's not possible? Because I don't know what I was doing. It has been a very serious journey, to be sincere with you. But I don't have anybody to mentor me. That was it. Even my mentor did not explain this that I'm explaining to you. Yes, I got to know about it through study, buying course. I think I bought a course of about $1,000. That was in that course that gave me insight of how to actually trade profitably. I was doing high risk. I will just, if the thing just go against me now, I was not even analyzing again. If you have not been frustrated in such a way that you enter a trade, it go against you, you cut it, it start going your way, then I will not, before I do it, I've already said I want to enter in 4 hours time frame. I'll go to 1 hour 1 minute time frame. I'll now be checking the candle. I'll now be saying, God, let it go up, let it go up. Immediately it's going up like this, I will enter with big loss size. Before you see it again, it has turned back. That was practically, and I have the right knowledge. That's the funniest thing. I have the right knowledge. I know someone is saying that someone, I'm telling someone's story now. I'm already telling someone's story here. I have the right knowledge, but I cannot stay disciplined because I don't have a system. And that is the difference between a profitable trader and someone that lacks profitability, because you don't have a system. And a wealthy person also have a system. They have a routine. But those people that are poor, they don't have a system. I know someone in the estate where I live. I need to thank God nobody knows the person here. This person, I wish to see him every morning at one barbing salon. When I'm taking my son to school, I will see him at one barbing salon, and he will be taking baraga. He will be drinking, and this guy has hard work. So I was coming, was it 2 days ago or 3 days ago, and this guy was taking his normal alcohol, and then someone was calling him for job. The guy was saying, hey, I'm in another place working now, and he was giving an excuse that he's working in that place, but only and behold, he was actually taking alcohol, and he was saying that he's going to do the job tomorrow. Someone calling you for job, but you are there gisting with someone in the shop that is making money, and that is what keep people to be poor. It is a simple philosophy. It's not the matter of maybe God and all of that. They're not doing the right thing they should do, because there's no system, there's no structure, there's no check and balance, and there's nobody that also mentor them to get to that stage. And that is why I used to tell young people, don't fall into that trap of just trading and trading and trading without any plan. These are the things that you will not see mentorship out there. That's why we are pushing into the world. We are going out massively to push the right things to people. Okay, so let's go straight into it. Why capital preservation matters. Most profit challenges give 5% daily drawdown. Now 8 to 10% target total drawdown. Risking 1 to 2% per trade give you only 5 chances or fewer chances before you fail. Before I know it, I will have been in 2%, 3% drawdown, 4% drawdown. I'm just gambling. Okay, and then I will lose the account in less than a day. I told you, I've bought, especially fundedness. If you go to my dashboard of fundedness, before it is really bad. 5 years ago, you will see me buying Puffem instantly that same day. No, it's not up to 5 years. I think fundedness should be 3 years now, so 4 years. I started with fundedness very well, and we burn it all. But those are the things that shaped us, and you don't necessarily need to have that experience. But if you don't follow what I'm saying, of course we have the experience. They've said that experience is the best teacher, but a wise person does not experience fire before you know that it can burn. Okay, so risking 1 to 2 is, that's the first lie they told you. Risking 1 to 2% is a lie. You will not be profitable with risking 1 to 2, even your personal capital, because immediately you are down 2%, 3%, 4%. Tell me, forget. You are not going to survive that account. Even your personal account, even if you are trading $10,000 account, that is your personal account. Immediately you are down, you begin to panic, because you know what that means. Especially that you are in naira. You know what that means in naira. You are already down 3 million, 4 million naira. You begin to panic. Okay, so don't risk 1 to 2%. I'm going to give you the model I use. Now, the goal isn't just passing. The goal is just not to make profit. It's preserving capital and buying time. Listen to the 2 things you are focusing on. You are preserving your capital, that is one, and you are also buying time to get good setup comes. For good setup to come, you are buying time, because price might range today. This is what people don't know. When you are trading every day for a whole week, price can decide to range. Look at gold, what gold is doing. Gold has been ranging for the past 2 weeks now. Those people that have been making money from gold some months ago, now they cannot make money, and then they will now still continue overloading their gold trade this week, and they are going to lose money. Because you can look at gold now, buying now, before the next few minutes, start selling again because gold is ranging. And that is why it's also advisable for you to trade one pair. Me, I'm a good trader, you are deceiving yourself. Okay? This year can favor gold, but next year can be a down time for gold. That gold will not even leave one position. That is why you need to build yourself to be a professional trader, to trade confidently on multiple pairs. Though you can be selective in your pairs, good. You can be selective, and I'll also give you the next class we'll talk about pair selections. Okay, pair selections. Which one are fast moving pairs, which one are slow moving pairs? We know that now. So the goal is not just passing or making profit. Your goal is to preserve your capital for a good day. Okay, if you can survive the bad day, then you'll be able to live in the good day, and that is the philosophy of life. And that's not that all these people don't lose money. They lose a lot of money. They lose money in millions, but there's always a way that they be able to stop their loss, control their losses, and when they win very big, and that is the thing. Okay, so defining trade 0.25% to 1%. Now someone will tell me, if I'm trading $100, how can I be risking 0.25%? When will I be able to come out of poverty? That is why I have told you, don't trade your personal money, put that money into profit. I've said this before. Some people have said that my own know that I'm saying my own, then they tried it, they failed, because smaller account is not easy to really trade. I'm telling the truth. Today, if you start with $3,000 account, if you make 10% in the period of 3 months or 4 months, that is $300,000. $300 times what the exchange rate, at least I say up to 400, 500. Okay, then from that money you can scale up to $10,000 account, scale up to $20,000 account. Immediately you start trading up to $50,000 account. I'm telling you, you're already a rich man in Nigeria, because at that time in 2 months you are making up to $1,000. $1,000 is about 1.6 million. That is good for you. You are now saying something which I'll also be putting you through on the system as time goes on. This approach gives you more. So we say start with 0.25. That's what I used to do. I always start any profile account I'm trading. Even if I reset my account now, I'll start with 0.25. Why am I starting with it? I know there's always this kind of early enthusiasm and all of those things that make you feel at least, I want to trade now. You don't know how it's going to be. So my first 2 trades can end up in losses, but it's not going to kill me, because if I reach 0.25, that's not going to kill me. Okay, then increase. Immediately I'm up to 3 to 5%. I increase immediately 3%, not 3 to 5, mainly 3%. I increase to 0.5. Okay, but as for my account, I start from 0.5 immediately. It depends. If I'm trading any account that is above $100,000 account, I start from 0.25. But if I'm trading lower than that, I start from 0.5%. Okay, only scale to 1% when you are significantly ahead, like 7 plus. When I'm 7 plus, okay, and my target is now the account I'm trading, my target is 15%. Immediately I get to 7%. I'm currently around 6%. 7%, I'll scale up to 0.75. I'm currently risking 0.5 from my capital. Immediately I'm up there, because now I have more money. I have more money in my profit now. I'm not even risking my capital again. I'm now risking my profit. And that is how to go about it. But if I see that I also risk based on the condition of the market, if I see that the condition of the market that I want to enter is not too conducive yet, maybe that level is not towards the level, I can reduce my risk. And when price now starts giving me the profit, I now use the initial risk now. I now have a buffer. These are trade management. That's this management skill, because trade management and risk management move all together. Are you gaining value for what I'm saying? I'm just talking since nobody is clapping for me. I will stop. I'm giving you what you will rarely see on the internet. Thank you. So let's continue. Now remember, consistent low risk plus good setup challenge success. That's it. You're going to be successful in trading. There's no way I'm not going to be successful in trading. I'm telling you. With this. Now, there's a particular place I wrote. Is it not here? Okay, let's continue. Now, this is a calculation. I'm not going to give you that. I don't have the time here. When you lay hands on the book, you go ahead with that. Okay, stop loss in pips do not equal risk percentage. I've said that earlier. Your lot size control your exposure. That was what I taught you last week. Don't use fixed pips stops. Use market structure based stops below or above a key low or key high levels. There's another technique you can use, ATR. There's what we call ATR, but I won't be able to explain that now. You can use support and resistance. You can use breakout and retest zones. So are the levels you should use for your stop losses. Calculate your position to match your risk percentage. Always have that in mind, that per trade you are not risking. If I have 3 setup at a time, I also reduce my risk. If I'm risking 0.5, 0.5, and I have 3 setup or 4 setup, I will reduce my risk on each setup to around 0.25. Because now if I am risking 0.25, overall I'm now risking 1%. Always know that. But you are risking 1% on GBP USD. You are risking 1% on GBP JPY. If the two go to your losses, you are already down. These are the things that people don't tell you there, but I'm telling you this because I have experience, and this is how to be consistently profitable. If you say a profitable trader, this is what they do. I think I shouldn't have given out this meeting access to everybody. This is too much. I mean, what do you think, guys? This will be in the master class. This is too much. I'm thinking this is too much. Nobody's talking.
Thank you, sir. Thank you, sir. Thank you, sir. We appreciate, sir. Thank you, sir.
I want to hear from Prince Will. Prince Will, what do you say? I don't want to hear from Mr. Alhaji Damola. He's saying thank you, thank you. Prince Will, what do you say? I'm just digressing a little. I want to relax a little. I've talked. Today I've talked too much. We had seminar earlier today and we talked. Okay, so now let's give an example of what I'm talking about. Prince Will, I'm with you.
Hello, sir. Can you hear me, sir?
I can hear you now.
Okay, sir, we have already started.
Your voice is going and coming.
Hello?
I can hear you now.
Okay, sir. I said we have already started. Maybe we can say
You should forgive them, Abi.
just for today.
Okay, you should forgive them for today, no problem. Now, one setup might require a 30 pip stop. Another might requires a 50 pip stop. Both can still risk 0.25. That's it. Don't, because of you want to risk 0.5 and then say that you want to put a benchmark to all your risk. No, you can have a rule that say that if it's above so pips, I'm not going to take it, or you will wait for a way to reduce it. Okay, according to what the stop loss has done. Last week I told you how to set stop loss. Stop loss should be at your invalidation level. If it's not there, you are wrong. If at your invalidation level and to your entry is 70 pips and you go and put it at 40 pips or 30 pips, it will eventually hit your stop loss. And then you will say, it has hit my stop loss and it's going my way. It's because you did not put it in the right place now. It's not the market. The market does not hear any language, does not understand English. China, Hausa, Igbo, it doesn't understand it. It only understand supply and demand. And if you are not careful with that, you don't understand that, you are going to burn your finger. So each of these different can give you different pips value in terms of stop loss. Then adjust your risk to that, but your risk can still be what, 0.25. Use a calculator or position size tools to keep yourself consistent. Okay, high risk on low winning rate. Now this is another thing. Most traders, most of these ICT guys or most of those people that are there, out of 10 trades they lose up to 5 to 6. It's not bad. That's not the problem. The problem is that on a very low winning rate, you are still risking high. Your outcome is low. If you have up to 40% winning rates, you are still profitable in trading. I used to tell people that 3 out of 10, 4 out of 10, 5 out of 10 is not bad. It is good that makes us feel bad when you even get 7 out of 10. No. in the way the life works, 7 out of 10, 4 out of 10, 3 out of 10, you are doing well. Especially if you are doing 4 out of 10, it means you are very good. You are really good. Okay? Though there are ways you can do 10 out of 10 also in trading. But of course, it's not that you taking a lot of setup. If you reduce your setup, you can do 10 out of 10. Okay? Now, many traders lose challenges because they risk 1% plus per trade with only 40 to 50% winning rate. My winning rate in analysis is up to 80 to 90%. My winning rate. Okay, but with that, I don't even risk 1%. Okay, because I know that emotion can set in and my winning rate can still reduce to about 50 to 60. If all of these things in place, forget about psychology. There's nothing about psychology. You are doing the wrong thing. Something is triggering that psychology, and it's because you're not following the proper risk management that trigger that psychology. Look at me. For me to conveniently hold trade over the weekend, abba, it's not because I understand the market than you, although I might understand the market than you, but not because of that, because I've already put in the necessary measures in place, and there's nothing about to panic about. If it come back open and hit my stop loss, I still make profit. If it move my way, I still make more profit. That is how to go about it. So prop firm success is about risk efficiency, not just big wins. Okay, focus on setup with 1 to 3. 1 to 3 is okay. Don't do more than 1 to 3. That's the truth. 1 to 3 is okay while risking low, especially while you risk low, and especially if your winning rate is low. Okay, that's if your winning rate is low. But if you trade with me, of course, 1 to 2, 1 to 3 is okay. As a matter of fact, I can see 1 to 7. But if I don't pick 1 to 3 out of that trade, I'm good to go. I leave the rest for you to be battling with. Me, I don't make my own money. I'm going to the next one. Okay, because I have a very good winning rate. But if your winning rate is poor, if it's poor, increase your a lower winning rate most of the time gives more higher risk to ratio reward. There are some people that they are calling chemistry students now in forex trading. They call themselves alchemists. Those people claim that they can even use 2 pips, 3 pips, 5 pips stop loss. But that is not actually what makes profitability, because that thing can hit their stop loss more than 70% of the time. They have very low winning rate. That is it. But they have crazy risk to ratio reward. They can risk 3 pips and then make 30 pips. Can you see that these people are not smart? You are risking 3 pips to make 30 pips. And they will call it how many? 1 to 10. That's what they will call it. But it's not really wise. But probably maybe you're supposed to have used 20 pips for that. They will call it 1 to 30. Thank you. 1 to 30. That is not reasonable. You don't need all of that. And which they will not tell you that this thing has hit their stop loss multiple times before it works. It hit their stop loss one time. Some of them, they have 30 to 20% winning rate. So if your winning rate is low, increase your risk to ratio reward. Okay, but most of the time I always tell you, you don't need the risk to ratio reward. Be good in the market in such a way that 70 out of time, most of the time, 70% to 80% is good. Okay, you can lose 6 trades in a row at 0.25% and still have 8.5% drawdown left. Yes, because if you lose 6 trades in a row, you are only losing 1.5% of your capital. Can you see the goodness of risking low? Even though if you risk, and I James Toby Samuel, will never lose 6 in a row. How would that be possible? Because of course I have the data. I have my data that shows that the highest I have lost in a row is 4 trade in a row. 4 is even too much. Most of the time it's always 2 to 3. And if you work with me, if you trade with me, of course, even you yourself, you don't need to clap for me now. Some of you that are ready, are you losing 6 in a row? Some of you that I trained, are you losing 6 in a row? You don't need to clap for me. It's what I have trained you guys to do. Mr. Adura, do you lose 6 in a row since you have been trading? That in a row, you have 6 losing trade in a row. Not at all. Yes, I'm trying to look at those people that just came into trading not quite long. Adedamola self, I don't expect you to lose 6 in a row. Adedamola, talk to me. Do you lose 6 in a row? Prince Will. Yeah. So you don't need to do that. If you trade the way we trade, you don't need that. 4 in a row, 5 in a row. Then if you are risking 4, let's say we are losing 3 in a row, with risking 0.25. You are not up to 1% down. Can you see the good thing here? Then there's nothing I want to trigger your emotion. Even though if you lose one trade, you know that you are just risking 0.25. 0.25 that you can make. And sometimes when I risk my 0.25, if I see risk ratio to God of 1.4, 1 to 4, I make 1% with just one trade. Because I'm a swing trader and I hold trade for long. And sometimes if I risk 0.5, with my 0.5, if I have 1 to 2, I make 1%. Can you see? The same thing that you want to do is what I'm still doing. So if I now have winning streak of about 5, I have already made 5% with even 0.5. Is that not reasonable? That is how to trade. These are the things that they are not telling you. But that is how professional traders are being bet, because we cannot control the market, but we can control our capital, what we make and what we do not make. Okay, so let me summarize now, and that's where I'm going to stop. There's still more to this PDF. Of course, I'm not expecting you. I know some of you are doing shaka. You are already screenshotting everything I have here, and that's why I'm going to stop here. Okay, so you risk your risk plan per trade now 0.25%. Scale up to 0.5 when you are 3% and above, and then go to 1% only when the reason why I go to 1% is because now if you are already up with 7%, you are already up with 7%, you have a buffer already, and then you risk 1%, you are still 6% down. Immediately you are get back to 5%, go back to your normal thing you are risking. Okay, but without 1%, it can make you to make 3%, which makes you to 10% straight away. Okay, so those are the things that we need to do. Never risk 1% at the beginning. Never. I'm telling you this, never. You calculate loss size for each trade based on stop loss and risk management. I think we have done a very good job today. Any question? Like I said, there are more to